So hi everyone, we can look at the screen right now and see that right here, the market was having a clear uptrend, but then it was broken after forming these candlestick patterns right here. But then we can see that we have a new uptrend. And even right here, it dropped significantly, but then it was coupled up by a new uptrend. But what I want you to know is that, and what I want you to see keenly is that for every time the market formed this candlestick pattern, there was a big change in trend or a reversal right here. And then there is also this one right here as the market turning points. So this candlestick pattern right here is what we call the bullish engulfing pattern. Okay. So this bullish engulfing pattern is whereby the subsequent bullish candle is bigger and covers the entire body of the previous bearish candle, just like you can see right here. So this is a very strong bullish indicator within the market, and in this video we are going to be studying more about the bullish engulfing pattern. So we are going to be looking at the bullish engulfing, and this video explains everything that you need to know about the bullish engulfing. So in general, as we said earlier, is that the bullish engulfing pattern is whereby you are on a series of a downtrend and then you form a bearish candle, either big or small. But on this bearish candle, the subsequent candle which comes is bullish and it covers the entire body of this bearish candle. So if this is the body of our bearish candle, the bullish candle will come and open either at the same price where this candle closed, but on its closure, its body will cover the entire body of this candle and forming what we call the bullish engulfing. So this is a very strong indicator that the bulls are in strong control of the current market, and then we expect an uptrend. Okay. So for example, when you look at the chart right here, which has just popped onto the screen, we can see that right here, we can see that the market made some good reversals. Okay, this is what we call a small retracement. But then after forming this candle here, which is green, the one you can see, this green candle which covers the entire body of this bearish candle here, the red candle, the market continued into its uptrend. So in general, bullish engulfings are also very good indicators of continuation. You can see that even right here, the market made a very big retracement, but after this big candle right here, covering the entire body of this previous bearish candle, we continued into the uptrend and we even broke above the previous resistance. So that is what we call the bullish engulfing. Still, when you look at the chart, once again, we got a big retracement, or actually it looked like even a reversal from the uptrend. But after forming this bullish engulfing, once again, we got a new uptrend. Okay, so bullish engulfings are very strong indicators of market reversal from the bearishness of the market into the bullishness of the market. Okay, so this pattern within the bullish engulfing, the real body of the bearish candle, that is from the range or from the open to close of that body, is encompassed by the body of the consequent bullish candle that we explained already. And it indicates an increase in activity from both bears and bulls and a shift of overall market sentiment towards the bullishness. So we are saying that when we see this bullish engulfing pattern right here, the market activity has increased. That is one. And then we are seeing that the market sentiment, or where the market is expecting to go, is going to go to the bullish side because of this big because of this big bullish candle. Okay. In most cases, for the bullish engulfing, it should be viewed in a consideration of the current trend, and in most cases, that should be the uptrend, because I said that the bullish engulfings are very good at showing continuations of the market. Okay, and when a bullish engulfing occurs, it shows that there is a change in trend or there is an onset of a buying demand, which becomes prevailing force that ultimately pushes the price higher and higher. Okay, So where do we normally find these bullish engulfings? Okay, so if you are on a series of an uptrend, we know that an uptrend is made up of these lower high and then higher high, higher low patterns. And when the market goes high, it has to swing low to breathe out. Okay, you think about it as breathe in, breathe out. Here, breathe in, then breathe out. After breathing out, the market will form a bearish candle, but this bearish candle in most cases will be followed up by this big bullish candle. So this big bullish candle will become an entry candle for us to continue within the market trend. Okay, so we can look at this chart right here to spot some bullish engulfings, and we see if the market surely changed. Okay, so for example, right here, this one looks like a bullish engulfing, but on the other hand, this previous candle, which is a bearish candle, was so small. So that one does not show an increase or an increased activity within the market, because this candle is a doji, and it simplifies that the market pressure is decreasing. So when it is followed up by a big candle, we do not consider it as so much of a bullish engulfing, because there is low activity. Okay, but when you look at this candle right here, we are expecting a big retracement. Okay, so when you look right here, we can see that we are having a series of higher high, higher low pattern. Okay, like that. But on the other hand, right here we have two series of strong bearish candles, this one and this one. So here we expect the market to keep on dropping, okay, to make a very big correction. But then it was followed up by this this bullish candle covering the entire body of this bearish candle, which was an active candle, and therefore we got a new push in price to go higher. So still, when you look at this chart, we can be able to spot that the market is in a clear uptrend, because it is making a series of higher highs and then higher low patterns, okay, like that. And then here we got a very big market correction, which was followed up by a very big bullish move. So we want to spot and see at the points of market corrections, for example, here, okay, and then here, and then here, then here, and then here, can we spot some bullish engulfing patterns? So we can look right here and say that, oh well, here there is a bullish engulfing, but still we say that a bullish engulfing, in most cases, for it to be an accurate pattern, it is supposed to be followed up by an active bearish candle. But when you look at the candle which is right here, when you look at this candle down here, this one here, it is a very small candle on the bearish side. So it shows lower activity within the sellers. And if it shows a lower activity within the sellers, the subsequent candle is a bullish engulfing, but we do not consider it so much within the market. And then still the same happens to this thing here. When you see this tiny candle, it shows indecision within the market, but it was followed up by this big bullish candle. This one will not be considered a bullish engulfing, though on the other hand, other people will consider it. But there is a decreased activity within the bears. But when you look right here on this candle, right here, we can see that this red candle is a big candle, and it shows an activity within the bears to push the price down, but it was followed by a very big candle from the buyers, which shows it is a bullish engulfing. Okay, and then we can see that the market made a big move up. And still the same thing right here, we can see that the bears are trying to push the price to go down, but again, you can see that it was followed up by this candle covering up the entire body of this candle, making a bullish engulfing, and then we got this move up. So when we see a bullish engulfing, where is our entry points and where are our exit points? So if you had considered this one to be a bullish engulfing, which some of you will do, of course you have to put your buy stop a few pips above the bullish candle, and then the stop loss is at 1.5 of the ATR, and then you could be able to catch the wave up. So for example, here you put your buy stop order right here, and then the stop loss, okay, and then followed by a wave up. So when you look here, you put your buy stop. Because of this bullish engulfing, we are expecting a trend continuation. So we have to consider the trend at that current market situation, and then we can see that right here it was making series of higher lows, which means it is a clear uptrend. And then after forming this bullish engulfing, we expect the price to go higher. So we put our buy stop order. We normally don't buy at the market price because the following candle can just come and reverse. These things do not work all the time 100%. So to avoid that, we normally use market orders, which we shall study in more videos. So you put here your buy stop, put here your stop loss, and then you can be able to catch the wave up. This is take profit one at the first level of resistance, and then the other one will be exited with an exit indicator. So as a bullish engulfing, okay,